Hey everyone, and welcome back to another Tesla weekly video. For today, a very special one because Tesla is now at new all-time highs. At the time of making this video, Tesla one share will cost you $436.23. It has a market cap of $1.4 trillion, which means year to date the stock is up over 75%. Year on year, the stock is up over 82.3% or 84% depending on when you're watching this video. Now, yes, it's true when you're looking at the pricing metrics, forward PE here stands at 140 times. EV to sales, 12.4 times. EV to EBITDA, 70.2 times. Now, remember, pricing metrics are based on what analysts are expecting this company to do in the next 12 months, based on what the company's guidance is, but we don't really have guidance from Tesla. So this is basically what we're seeing here for fiscal 25 and fiscal 2026. Sales growth of above 16 and 17% year over year, and EPS growing much faster than that. In fiscal 2025, EPS is expected to grow by 31.8% year over year. That's because, well, fiscal 2024 has seen a decrease of over 20%. And then in fiscal 2026, we see EPS growing another 22.4%. I still believe that these numbers will be revised on the upside once we get the Model Y refresh, once we get the new and more affordable models as well, ramping up of the Shanghai Megapack factory. I think that's still being overlooked because, well, it's close to being done. So we should expect already a small impact in the first half of 2025. And then, of course, with regards to demand, interest rates coming down and all of that, I think that could boost Tesla's sales. Now, is all of that already priced in or not? That's up to you to decide. I think a lot of it is already priced in, but then again, there is a lot that probably is not priced in, and that's, well, the Tesla Semi, which should launch 12 months from now, FSD, wide launch, higher adoption rate, so software types of margins added on top of all the other things that get calculated in the business. Yes, I know there are some folks that are still skeptical about that. Remains to be seen what happens, and then the huge progress around the bot. Now, let's be honest here, I don't think we're going to see any short-term impact on Tesla's revenue with regards to Tesla's Optimus bot, but then again, the stock market is always forward-looking, so let's see what happens with that. Now, I do want to show you a couple of extra things before we go into the usual stuff. And that is the average analyst price target. Of course, big difference, right? The current one is basically 40% lower than when we are right now. But in the last couple of weeks, you can clearly see that the average has gone up from $233 to now $262.8. We're going to go over a couple of names that did raise their price targets more recently. And so you tell me, is this based on fundamentals or is this based on the fact that the stock has gone up quite a lot, close to 90% in the last 3 months? Then if we look at the pricing metrics compared to the 5-year mean, it's also pretty clear where Tesla stock is at right now. Way more expensive than the 5-year mean with a price earnings to growth ratio of 17. With that said, let's start with the usual stuff, numbers out of China, out of Europe, and then a couple of extra things that happened throughout the week. If you enjoy this type of videos, leave it a thumbs up, subscribe if not, we really appreciate that. If you want to support me even further, do check out the link down in the description and in the pinned comment with the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. So the Tesla weekly insurance number came in at 21,900, continuing the great momentum that we've seen over the past couple of weeks. Year to date, we're up 8.1%. Now, if you're not a member of this channel, that's okay. You can watch these videos on a weekly basis and you get access visually to the Google Sheet where we basically have all the weekly insurance numbers. As you can see right now, year to date, we're at 601,587. Last year, the total was 610,000, just over that. So yeah, next week, well, right now already, this number will be surpassed, so it's going to be quite an easy beat year over year. For the quarter, we're at 141,200. Q3 was 181,000. I also think we're going to beat that number quite comfortably. Continuing here with the model mix. So we've had 16,760 Model Ys insured and 5,120 Model 3s. And as you can see, this is probably the highest week for the Model Y. So despite all the rumors of a Model Y refresh, it's still a highly popular vehicle in China. Moving on to Europe and the select countries here, as always, UK, Norway, Netherlands, Sweden, Denmark, Italy, Spain, Switzerland, Czech Republic, and Iceland. The number for the week was 5,200. Also continuing here the positive momentum that started, well, quite a while ago. Right now, quarter over quarter, we're also up 33.7%. And year to date, we're up 11.3% just in those countries. Now, of course, we've seen some solid momentum in a big country, which is the UK, which has overtaken Germany for Tesla in Europe, although the UK might not really be in the European Union, but okay, never mind. You can see that we're seeing quite some solid momentum here, right? Since the start of October. And all in all, for the year, this is basically the picture, not just for Europe. We've seen, of course, the big difference maker in China, South Korea, Netherlands, Belgium, Malaysia, Taiwan a little bit. But the big negative hitters here are, of course, Germany, huge hit, France, Australia, Denmark, and then all the rest here. Even the UK is still negative right now, but definitely, as we've seen some positive momentum with regards to the UK. Now, what does Tesla have to do to switch this, Germany and France, in 2025? It's a good question. In Germany, maybe they should make a car that's called not a Tesla, and that might maybe surprise them. Or maybe if there is a more affordable model coming out, especially for European markets, I think that could definitely help the cause. Then with regards to the overall EV sentiment, I think this is a survey with over 23,000 people from 18 countries. So, okay, it's good data to get, but let's not make it an overall conclusion. The question here was asked, if you had to replace your EV tomorrow, would you get? Well, 92% said an EV, 4% said a plug-in hybrid, and only 1% said a gasoline or a diesel car. What was also not so surprising is this. I often experience range anxiety. And if you look at the countries where they agree the most or way more than the others, it's probably because the infrastructure is still not at the level that you're seeing in countries like the United States, maybe even Canada or Australia. And this, I believe, will get fixed in the coming years. Plus, I still will repeat myself again and again. I think that if you educate the public through advertising, not just post on X, because believe it or not everybody lives on X. If you start advertising and showing the public that, look, the infrastructure is improving, you can go on long trips because, well, we are building superchargers here and there. Plus, if you plan your trip through your Tesla vehicle, it will show you where you will have to stop and charge your vehicle. Educating the public will go a long way to make sure that these green bars here, of course, India, you really need to build infrastructure there, but these green bars will go to the disagree and strongly disagree part of this slide in the coming years. Then switching to a couple of price target upgrades and reports. So we've got one from Deutsche Bank here, which talked a little bit about the Tesla Model Q. Well, the Tesla Model Q was basically just an internal name that they used. So yeah, apologies if you got disappointed by that. Deutsche Bank says it will launch in the first half of 2025 and will cost less than $30,000 with subsidies, or $37,499 if Trump cancels the IRA tax credit. Even if he does cancel, I do think that it's going to take some time. But then again, I'm no lawyer. I don't know how everything works in the United States. And then they say here that it will be built on Tesla's existing lines. This is something Tesla themselves have told us. But the price here under $30,000 with subsidies, I do wonder how expensive it will be in Europe, because believe it or not, well, Teslas in Europe are quite expensive. Moving on here, we've got some analysts that suddenly thought that today might be, or the last couple of days might be a good time to upgrade our price targets. So I'll start with the lower one here. Morgan Stanley Adam Jonas raised his Tesla price target to $400 from $310 while maintaining a buy rating. Probably has nothing to do with the fact that the stock is higher than $310. Cantor Fitz analyst Andres Shepard has raised his Tesla price target to $365 from $255. We are becoming more bullish on robotaxis. And then CFRA is raising their Tesla price target to $450 from $375. Our buy rating reflects our view that shares are deserving of higher multiples on a more favorable view of the regulatory approval timeline for Tesla's autonomous driving technology. Tesla's energy storage segment has become an important growth driver. Tesla's valuation premium relative to auto competitors reflect various technologies in development, including a ride-hailing app, a humanoid robot, AI computing, and fully self-driving vehicles. I think that even at $375, Tesla already got quite a high premium, won't you agree? And then the last one here, Goldman Sachs, raising their Tesla price target to $345 from $250. We believe the prospects for Tesla's auto business, including the growth impact from new refresh models planned for 2025 and progress with FSD, including the performance of version 13, will help determine the valuation level the stock will trade at, and if the higher valuation multiple is sustained. So basically another example of the stock is much higher from their previous price targets, so let's upgrade that and then we'll see what happens, right? We'll see what happens in 2025 if it does or does not make sense. And so right now, let's actually look at what's expected from a free cash flow perspective. We've seen the revenue expectations from analysts, but what about free cash flow? Well, free cash flow for the year, just like EPS, is expected to be down close to 24% here to $3.3 billion. Then it's expected to more than double in fiscal 2025 to $7.252 billion. Then in fiscal 2026, grow another 20+% to $9 billion. And so if we do a quick reverse DCF based on the information that we know right now, we can see that to justify today's price, Tesla will have to grow free cash flow for the next 10 years by 41.7%. Of course, you can say that, well, the analyst projections for free cash flow and revenue are quite low. So yes, by fiscal 26, I don't think free cash flow is going to be $9 billion. I think it's going to be already higher than $10 billion. Okay, fair enough. But right now, this is what we got. Also based on a quite weak trailing 12 months free cash flow. This is basically what you're paying for right now. And so last thing here is what we're seeing. This is, by the way, on the monthly, just to show you the beautiful momentum that Tesla stock got. We are well started already here back in August. Clean breakout, and now we're, well, making new all-time highs. On the monthly, we're actually a little bit overbought. If we switch to the weekly, we are, of course, overbought already for a week plus or so, but you can see the same thing right here. Since basically the end of August, the stock has gotten quite a lot of momentum, with momentum accelerating after the election. So overall, going into 2025 at new all-time highs. Of course, we still have a couple of weeks left, so stock can go down, stock can go even higher. But what do you think? Are we going to 2025 as a way more powerful and stronger company fundamentally, or is the stock just way ahead of itself? Let me know down in the comment section below. I'm quite excited for the Tesla business overall for 2025. Like I said, Tesla Semi 12 months from now, FSD could have wider adoption as well. New and affordable models. Let's see how affordable they are in Europe. Refresh Model Y should drive more volume. And then, of course, my opinion, the most important part, which is the energy side of the business, high margins, and of course, the Shanghai Megapack factory ramping up that could help the business tremendously. So quite exciting. Anyways, let me know what you think down in the comment section below. Like, subscribe to all of that, and I'll see you all in the next one. Bye-bye.